All right, it's March 13th, maybe March 14th, depending on when you're seeing this. But we woke up to a lot of crazy stuff. It was the first Monday in trading session since this whole bank run in quotation marks. And honestly, it was actually the calmest day out of any of the days that we saw. But I really thought in the midst of this, I wanted to see how the banks really feel. So I got a couple of updates for you. I got a little different of an intro today, and we're going to talk about what's been going on. But there's a lot of other updates from the Fed, what they did with the backstop. We're going to talk about the rate hike narrative. That was the biggest story of the day. But before I did any of that, y'all kept making fun of me over my little bills, huh? You kept making fun of me over this, right? So I wanted to see if the bank run was actually real. Yes, so I've been hearing a lot about it. Again, I've been telling you, I feel pretty safe with my money at the bank so far. This has just been kind of an unprecedented thing, and we're seeing it play out even in the stock market. But I've been hearing people say, I can't even get $10,000 out. I can't do this. You better panic. All of that. So I wanted to see for myself. So what I did today, with a couple hour notice, I'll show you some of the clips here too. I called up my bank. I gave them a very short notice and I said, hey, I need a lot of cash right now. Can you give me United States dollars in cash? I even used an account that I use very actively. I don't really like showing this, but for the nature of this story here, I'm just trying to show you that it's just like not even an extreme request for what I was asking. I'm saying, hey, we have a lot of business expenses. This is what we doing on the regular anyways. I need this in cash right now. Can you do it? And honestly, I'm not going to lie to you. I was very surprised, if not baffled, by what I experienced and what it was, man. I'll just show you, okay? I'll just show you, Chad. So I asked them how much money I could get. They gave me a couple of different answers. I kept having to press, and they're like, we can't do that, but we could do this. I got $2,000. I got another $2,000. Okay, actually, I got three more $2,000. So what they agreed to give me was $10,000 in $20 bills. That was the first set of our agreement, but they were not willing to do that initially. Then I got them to go into a higher denomination, and then they gave me $10,000 in $50 bills. So that's where we're at right now. You know, not too bad. That's 20K right there, give or take. Or no, I forgot. 2, 4, 6. Yeah, 20K right now. And then they gave me $20,000 in $100 bills, okay? So yes, within 1 hour notice, I was able to get $40,000 of cash from a big bank today, on Monday, in the middle of all of this. So in conclusion, with all of that, is quite frankly, I think the money in the big banks is safe. I think the regionals, they're the one having the problem. I don't think you need to be worrying about getting your money or not. And we've talked about this. The too big to fail concept is real. Like Schwab has a very good balance sheet. I don't think they have the same risk as like a SVB. But then again, that's the whole point. Financial instability is deteriorating right now. Everybody is doubting and asking questions about everything, right? But the way I'm looking at it now, until this develops, until we get through this week and ultimately Powell, it seems like for now, this is just a Wall Street and Fed risk for now. And then we're going to go from there. So Chad, let me know what you think. Post it in the comments. I thought it was fun. Yeah, we flexed it. Honestly, I just wanted to see. So I'm not that worried myself anymore. So y'all were talking smack about the, oh shit, I just dropped a bunch of money everywhere. But anyways, take this time. Make sure you guys are liking the video and please subscribe too. We do all of this for free. We give updates daily. Doesn't matter what's happening with the market. And we are live. YouTube.com/thestockmarket. 30 minutes before open. I almost forgot what I was going to say there. But yeah, all right, let me adjust this money. And let's talk about what happened today because you had some Fed intervention. And I got to hide all this money before my girlfriend come over because she going to think I have money. And I've been asking her to pay for okay. All right, I organized it as a happy face. I don't know if I'll try to make props out of it. But anyways, as far as what happened today now, we woke up yesterday. We were talking about how today is going to be important. We got to be monitoring to see if there was a run on the banks, pretty much if another bank went under. And today was the first day that nobody got clapped. But last night, between the watch list and everything that came out today, we found out the Fed and Treasury, they are confirming that investment or that funding facility. And that was the biggest deal. And this is why it is moving forward. Pretty much the Fed said, listen, we will give you this emergency lending facility where we will give you a loan. You have to still put up collateral, but we will give you a loan to match any deposits. Now, specifically, this is for Signature Bank, and that's what happened between last night and today. Another bank went under. Signature Bank is different than SVB. Silicon Valley and Signature, those are two different banks, but what was offered by the Fed, it applies to both of them. They're saying, you give us collateral, we will give you a loan. If anybody needs money out, you will be able to get a loan. This calmed things down a lot. Futures went up like 2% right when that happened. And why this is such a big deal, if you've been watching all these videos, we've been explaining the situation. It's one thing about customer deposits, bank run, but it's another thing with the unrealized bond losses. Now, I personally think the bank withdrawals are more important, but with the bonds, that's kind of where the story starts. But now, why what the Fed did was so big and why the market reacted. One, why did the market go up? And this is something you got to watch out for as we move forward. Bro, that's the plunge protection team. That means the government steps in, the market likes it, things go up. That's what they say. When the central bankers start freaking out, that's when markets stop freaking out, because support from governments and central banks, that's usually good for assets. So that's kind of where we're at with it. But in this case with the bonds, what the Fed pretty much said, they said, give us collateral, we'll give you a loan. But with the bonds and the unrealized losses, all of those bonds aren't worth as much. But this special lending facility, the Fed is saying, we will consider your bonds 1-to-1. We will consider them at par value, and we will loan out against it based on pretty much the value you paid for it. And we will treat it as if it is worth everything it was in the beginning. And that's what makes it easier for them to get loans. So that's what we saw happen. Signature Bank, they ended up going under as well. And then Joe Biden, he said he's going to hold everybody accountable, fire the executives. They said, stock people, y'all don't get anything. But they pretty much said this banking system is solid, everything is good, and then no problems there. And then even after hours, the Fed said they're doing an investigation now, a probe into the practices, even the San Francisco Fed. They said they're going to release it by May, but I mean, we saw what happened with Bostic after that one. But what I'm trying to tell you today, we kept talking about this, is that there really was no movement on the situation. So Thursday, you saw what happened with SVB. Friday, we woke up, SVB got halted. The Fed, FDIC took over. All the other bank stocks dropped. And then today, pretty much from the weekend, SBNY, that's the next failure. Then we woke up again, bank stocks sold off. Some of them rebounded, but it was day 3. But as of today was like the first day where you had some sort of resolution. We're kind of in the middle. We had no update on who bought the assets of SVB. I think people in the government said there was a bid, but they rejected it on purpose. They didn't want it to go through. You've been hearing UK and all of this, but for now, this is the first day. Nothing has really happened, but the problem with today, even though you didn't get more bank runs, more failures, or anything different than what we heard last night, the real issue and the real thing that we got today, it was updates from either individual investors, other banks, and even Fed speakers, or AKA Nick Timmerhouse, but everybody now was arguing on whether or not the Fed is going to cut rates or not. The bonds had the biggest movement today. So we've been showing you the Fed futures. Take a look today. The new thing about today is after 3 days of this, a new Fed facility for lending, another bank going under, even the White House talking about it. What has been the result? The bond market is now pricing in cuts again. Look at the dot plot. This has been mollywopped back and forth all year. It's actually been pretty insane, but the real update today is, what is the Fed going to do? Everyone's saying now, is financial stability the risk, or is inflation the risk? And really, that's going to be the back and forth we're going to get. Do I have an answer to that? No. What I'm telling you right now, it's still too fluid. We got to wait, and that's why tomorrow the CPI is going to be big, but it's still too early to tell, and we don't know. In my opinion, I do think now a Fed pause is possible. If you asked me this a couple of days ago, I would have said you're high out of your mind. Now it is possible. The bond market, the dot plot, or the SOFR curve, it's starting to show all of that, and people are getting worried. This may be equal and opposite reaction, the opposite or an equal force that could actually change everything the Fed said. But a lot of people noted this today. The Fed's mandate is price stability. That's more related to inflation, not financial stability. So if they do respond to that because of this, it will be unique. But technically, focusing on inflation more than bailing banks out, that should be the Fed's #1 priority and the mandate that they have been given. So we're going to find out, and that's why now tomorrow CPI is going to be key. We're going to be live. I'm going to have all of it for you. Pretty much the base consensus is that it should come in a little hotter because used car prices and a couple of other things like California heating bills and gas should be going up, and there was pressure, but other things like even rent may calm down, and some other good factors like food, they could bring it down. But pretty much most people expect it to come in line. But what I'm trying to tell you is be there tomorrow, but I don't think CPI is going to be the same. And what I mean by that is that our playbook for the last 7 months, we got to rip it up. And what I mean by that is just simply, it may not even play out where CPI is important. What I'm confused about for tomorrow is how a hot or a cool print will affect the Fed futures, because usually the CPI affects the Fed right before the meeting 1 week ahead, and that kind of locks us in on what to expect. But now I don't know if a hot print is going to make people think the Fed will be more aggressive, because now they think bank run is going to make them less aggressive, and then vice versa. How is a cool print going to react? Would people get more bullish on bonds or not? And how does it tie into this situation? So it's all going to be very fluid. I wouldn't be surprised. Maybe we get distracted with CPI tomorrow, but you will definitely get an update on this bank situation by Friday, and then we go from there. So Chad, I hope that helps. I'm going to see you for CPI tomorrow. I did make a play. I did grab another set of options today. I grabbed puts on EUFN. That's European financials. And pretty much they haven't had a Fed step in. They were weak at the beginning of the year. Remember, we got EPV. I'm pretty much thinking they'll get hit a little bit more. And then my dollar plays from yesterday, they calm down. And otherwise, holding my ES, NQ, and everything else you've been seeing. We're just holding that until Powell. And then we're going to see what happens, baby. Let's go. Let's go. Boom, baby. That's it. I have nothing to throw. I still got my stapler, son. What's up, son? But yeah, that's it. I love you, Chad. Drink that water. Stay hydrated. Stay healthy. Let me know if you have any questions. God bless you all for supporting and subscribing. And I'm going to see you in the morning, baby. Let's go. You ready for this? I'm going to just...